Welcome to Biztalk'22, an interview series organized by the Commerce Society of Royal College, where we have an insightful chat with highlighted business personnel. Our speaker joining us today is having a distinguished career in corporate affairs management, including consistent pitching of major news angles to business media. Having dynamically contributed to strengthening a major bank in Sri Lanka's economy, he is a master's degree holder in business administration from University of Sri Jawatanapura, a council member at Association of Professional Bankers of Sri Lanka, a fellow member at Institute of Bankers of Sri Lanka, and a proud product of Royal College. He is none other than Mr.Sanath Manatunge, Chief Operating Officer and Executive Director at Commercial Bank of Ceylon, PLC. It is with great pleasure that we welcome you, sir, and many thanks for taking time out your busy schedule to join with us today. I'm Kalyamettananda, the host of this episode. So, sir, today we have quite the range and spectrum of questions listed for you. Our first, sir, as a leading banker in the country, how would you explain the current macroeconomic situation in the country and its implication, especially in the banking industry?
Thanks for giving this opportunity to contribute something to my alma mater. So, looking at the economy, actually, we need to go back to maybe 2018 era, where even at that time Sri Lankan economy was having certain pressures, or it was not that resilient in terms of stability. Then came the Easter Sunday attack 2019, which disrupted many industries, especially the tourism. Then 2019 end, I think December or towards end, the government reduced the taxation, right? The taxation reduction created the unprecedented level of fiscal deficit, which actually impacted the entire, I would say, financial stability of the country. So that was the start of the issue, in my opinion. Once the debt to GDP, which is hovering around 120, is considered to be unsustainable. That was created mainly due to the fiscal deficit created by end of 2019. So this was even before pandemic. So if you see the Sri Lankan business model or the government borrowing pattern, historically we had been repaying debt out of new debt, or instruments. Once this huge deficit was created in the fiscal area, the country was downgraded by the international agencies. Then what happens is the ability for the country to raise money to pay these debts goes down. When that goes down, we create a level of either we'll have to go for high cost lending or totally depend on our revenue in terms of foreign currency, which was not enough at all. So then came the COVID, right? COVID came maybe first quarter of 2020. The COVID came, entire country came into a standstill, right? From schools to the banks to SME, factories, hotel, everything came to a standstill because the world has never seen a pandemic like that. We didn't know how to face that. Even there was no contingency arrangement for any country, right? So to speak, even the bigger countries, they just locked down. The airports were, full of aircraft landed, no travel. So what we call the global village suddenly expanded. They fell apart, and even reaching from here to a country like India was prohibitive. So in import-dependent country like Sri Lanka, and even the raw material we depend on these imports, the industry suffered a lot. Then the government had to spend a lot. While the revenue was low, the government had to spend on vaccination and also to keep the country going in terms of essentials, the pharmaceuticals, COVID centers and supporting, even giving some maybe support for poor families, 5,000 rupees each the government had to distribute. So the GDP contracted while our country rating downgraded compared to other countries, and by 2021 the economy became more fragile. So this is the history. So then when the industries were suffering and when the currency rates, interest rates were under pressure, definitely already strained economy like Sri Lanka couldn't bear this. So then only everything went out of control. So this is a thing which developed over a period of over 3-4 years, not a sudden thing. We faced the pandemic well, but the damage which is happening now in terms of the economic stability is more than what has been created by the pandemic itself.
So the last few years has been quite a turbulent time for the Sri Lankan economy since Easter Sunday attack in 2019, and subsequent pandemic situation has affected many businesses in the country, especially of small and medium enterprises. As a banking partner, what's your approach to deal with these affected local businesses?
So if you see, this is a good point. In any country, the backbone of the economy, the development, the future growth will depend on how the SMEs perform. So as a private bank, we are proud to say we are the largest lender to SME in Sri Lanka. We are the largest, not even the state banks. So we traditionally had a very good understanding of the SME business model, and also our association with the SME sector is much more than any of the bank in Sri Lanka. So even before the pandemic, we had this engagement with the SMEs. We were having a specialized, the Sri Lanka first Biz Club. We created a special, I would say, forum for SMEs to interact with the banks, interact with their counterparts, and also we help them to build their capacity, to face the challenges in an effective and a professional manner. So even before the pandemic, we had this engagement. So through this Biz Club and also through our branch network, we were able to reach out to the affected SMEs in a very efficient manner when the pandemic hit the industries. So the first message we gave the lending officers or the branch managers is talk to the customers. Talk to the customers and understand, because each customer will have different level of issues, right? So we told them, please reach out to the customers and have a conversation with them to have a genuine interest to help them out, to come out of this. Because as a bank, we can say you have a property, so we are going to sell the property and recover the money. It's not practical, and it's like killing an industry. So we wanted to bear the pain with the customer, help them out to come out, help them to come out of the problem, and consider to be a partnership. If they fail, the banks will fail. We are having public money, depositors' money, and as a responsible lender, we need to help the customer out when they are in genuine difficulties. So that was the approach we took. That's our general approach, and we escalated it to a very practical level during the pandemic. So we even went on to introduce certain loan schemes which are unique to commercial bank. We even reach out to multilateral lending agencies like IFC, and IFC provided $50 million as COVID support loans, exclusive for SMEs. Like that, we call it Saubhagya, the COVID support loan scheme, and we supported the SMEs to, sail through or manage this bad patch till they understand the risk of this pandemic, how to recover, from the risks they were facing because of the pandemic. At that time, for any industry, it was the survival, because we didn't know how to come out of the pandemic. So we supported them. The loan payments were, I would say, was in their last item of their agenda, because they were to pay their salaries, to maintain their staff, maybe to maintain their maybe distribution channels. So we didn't want to pressurize them to have bank loans or interest to be paid to the bank, but to support them to survive the bad patch. So we did it successfully. We gave even certain moratoriums, interest concessions, the capital concessions. We gave even more than the regulatory requirement, right? Because we wanted to support them. We knew this is a genuine, genuine reason why they are in difficulties. And as a country, if we would fail if we don't, look after these SMEs. On top of that, fortunately, 1 year before the pandemic, we created a centralized credit processing unit called especially with a consultancy from an international consultant. We created this centralized credit processing unit exclusively to process the SME loans. So we deployed SME support sales team across the country, all the proposals through the branches coming into this center and getting centrally approved. So this mechanism actually helped us to efficiently reach out to these customers and help and give these loans in a very speedy manner during the pandemic. So we had this unique business model which catered to the pandemic affected SMEs in a very efficient manner and for them to come out of their issues.
Yes.
So that's how we actually became the highest lender to COVID affected industries during 2020 and 2021.
So sir, today it's not a secret that Sri Lanka is going to a grave economic crisis. So today as a country, Sri Lanka is facing one of the worst foreign currency crises since independence. Our foreign reserves are historically low level and foreign currency inflows are not sufficient to support the country's imports and repayment of foreign debt. However, this situation has impacted banking industry at largely. What is your approach to deal with this situation as a leader in the banking industry?
So actually, if you talk of the banking industry, if you take a Sri Lankan bank, a bank has many way of getting foreign currency. One is through the deposits, right? Offshore and onshore dollar deposits, then export proceeds. Other than that, we have interbank limits onshore and offshore, like our counterparties in Sri Lanka or abroad. They place monies with us or they lend money to us. And the last one is multilateral agencies like International Finance Corporation or IFC, ADB, Asian Development Bank. So those institutions also lend to banks, right? So those are the sources on which the bank dependent on acquiring the dollars.
Yeah.
And also another thing is the worker remittances, right? So if a bank manages these strategically well, the US dollar liquidity would not be a problem. But as you mentioned earlier, with the country downgrading and also having these issues within the economy, then our counterparties will not look at the banks or the country in the same manner in which they used to look at us. So they will try to mitigate their risk, reduce the limits. So that's how this foreign currency, the liquidity stress came into the economy. On the other hand, as you have seen, the lack of prudent financial management created the unprecedented level of stress on the currency, and we have seen the currency depreciating by 100 rupees suddenly, we'd say, which was not historically seen in Sri Lanka at all.
Yeah.
Maybe in other countries we have seen. So when you as a, let's say, a worker working in the Middle East, when they see the system, I would say they lose the trust on the system. They may be reluctant to send the money. They might try to keep it there.
Yeah.
Worst is when you try to artificially intervene into market forces like exchange rate, there could be a black market or a grey market created. So that has also happened in Sri Lanka. There are so many informal channels in which the dollar is being dealt. Earlier banks used to get a lot of dollar inflows. Unfortunately, maybe a majority of the inflows were rerouted to these channels, which is not the mainstream kind of foreign currency flows coming into the economy. So that will affect the legitimate importers, and it's a vicious cycle. When the importers are not having money, from the banks, they will resort to these channels, and these channels will grow. Once these channels are established and they become very resilient players, very difficult to get out of the system. So that is a challenge. So from a bank's perspective, I would say the banks need to look after their depositors, and also try to build confidence in your depositors that you are a safe bank, and especially the dollar deposits coming into the country should flow through the worker remittances or any other investment, foreign direct investment coming to the country will depend on how you pose in front of these investors or depositors, how resilient you are, because they are worried about the money. So as a country, as banks, we need to rebuild that confidence in the depositors. Then also the trade flows, the exporters should be given priority to increase their export flows to the country, which is much needed at this time, because one of the main revenues in Sri Lanka is the exports, dollars. So we need to support the exporters to do their export business in a feasible manner, and also reassure that whatever the dollars they are bringing in will be dealt in a very responsible manner, because they are also worried about their dollars, what will happen to them. On the other hand, the foreign currency, the flows are affecting the raw material supplies. Maybe to produce goods and exports, or even produce goods and given to the local market, most of the raw materials are depending on how much foreign currency you have. So when the foreign currency is depleting in the banking system, the entire economy will contract, which we have seen, because less supplies for food, fuel, raw materials, medicine. So all these are interconnected. As an economy, as a country, we will go back if this is persistent. So not only banks, as regulators, the central bank to the banks, and also down to the general public, like depositors, they have to they have a responsibility in this very needy time to support the country to get back into, or bounce back into a resilience level in economic performance.
So today we live in a rapidly and radically changing and developing world, so to say. So more recently, landscape of global banking industry has radically changed and challenged by fintechs. There are many virtual bankers, Bitcoin and cryptocurrency operations, especially in developed financial markets. Do you see these trends flowing into Sri Lankan market? If so, is our traditional banking system ready to face the challenge?
Yeah. So it's a good question. With regard to banking, if you see, so bank is driven by key factors like the financials, right? The financial stability, how much of the deposits, advances you control in economy, this had been traditional. Then about your people, if you can have the buildings, technology, the money, everything, but unless your people or your talent is ready to give the service to the customers, it's just a building and a counter, right? So third thing is how innovative you are in terms of technology. Right? So financial stability, people, and the technology, those are the three drivers which creates that profile of a good bank. So this part, what you question, your question is coming from the technology part, right? So when you look at a technology, there are so many technologies in the world, right? We are a third world country, and we have certain budgetary constraints. So we can't be like Wells Fargo in America, or Citibank in America, or even DBS Singapore. Those are very developed bank. So then when you talk about these fintechs and new technologies, we need to first choose what is relevant to the customers, right? You can have many technologies which, if this is not taken up by the customer, is just an investment, and the money will go out of the country, and the ROI, return on investment, will be low. So first thing is, these technologies are good, very futuristic. Whether we need to embrace it now or later is a question, depending on the relevance to the customer. So that's a commercial bank policy also. We look at a technology, if it is relevant to our customers, yes, we do that. it's like many things like you mentioned about blockchain. It could be digital banking, mobile banking, the wallets, QR, then it could be even APIs, open banking, right? Those technologies are there, actually they are evolving. So whenever it's feasible for a bank, the bank should embrace that, because the future of bank is not going to be manual. One of the main ratio of a bank is cost-income ratio. Cost-to-income ratio is a key ratio where the efficiency of a bank is measured. So cost-income ratio, one part is cost, other is income. If you invest in the correct technology, you can actually improve both. In terms of cost, you will have less, manual work, more customer service oriented architectures, then staff cost will be low, your turnaround time will be higher, so that's cost. Technology can create a lot of improvements in cost. For example, RPA, robotic process engineering. So it will create a lot of efficiencies and reduce the cost. On the other side, the income. Let's say you invest in POS machines, credit card, IPGs, internet payment gateways. You can invest in mobile wallets, right? So many technologies are there to increase the income. So the cost and income both can be efficiently managed or improved for a bank if you, put money into these technologies in a wise manner, right? You should not overinvest. You should relate these investments to a customer requirement, and also, more importantly, you have to be very strategic. You can't invest in one technology today, then think, okay, this technology is not the best, tomorrow changing. No. You have to have a technology roadmap, a digital roadmap, data analytics roadmap, RPA roadmap. Like that, you have to have a roadmap, so you envision what you are going to do from today to, let's say, 2025. You can't, in technology, you can't, strategize for 10 years because technology is changing. So you have to be agile, but you have to have a roadmap. We are going to plug in these technologies in these years to cater to this specific customer requirement. And this is what we are going to invest. This is the return on investment. If you go on that path, yes, digitally, you can be a digital savvy bank. So the best example in the world is DBS. DBS Bank Singapore, they are considered to be the best digital bank in the world, right? What they have done is simple thing. They have created the space for the people to trial and error in these digital products, and they have facilitated the talent development towards more digital and IT savvy. They have transformed their talent, their system, everything to be more futuristic. So if a bank go on that path, in the medium to long term path, not a very short or very long term, but then they can develop a digital strategy, technological strategy around these areas. So that is the success. In certain banks like DBS, I can't remember the exact number, out of, let's say, 25,000 employees, about 10,000 now are from technology, not bankers. Because now the traditional banks are not required to maintain their traditional bankers, because the technology can do many things. Like analytics can decide for you more than a human brain. Then early warning systems can tell you before the actual risk happen. Then RPA, robotic processing automation, can do 100 people work within an hour. So likewise, the technology has encroached the banking to convert these banking into more technology companies, more IT companies. So that's where the banks are heading, because ultimately there's a famous saying, banking is required, not the banks, right? Banking is needed, not the banks. So whatever the fintech company or the platform which are giving the service will be the customer's bank in the future. Yeah. Already it's happening, right? So instead of a branch, a platform can do everything now. So platformification, the analytics based decision making, there are banks who are providing the loan decision with a click of a button. So to that extent, the analytics, these technologies can create banking much easier. So that's where we are heading, And unless the banks also embrace these technologies and partner with the fintechs, it's actually the banks need to be part of the ecosystem ultimately. Because now if you consider maybe you or young people like you all are in social media. Whether the bank is in social media, you are having mobiles, right? Always you are on mobile, whether bank is in the mobile. When you go to a restaurant, whether the bank's presence is felt in the restaurant by way of mobile or whatever, the device you have. So likewise, the banks need to be part of the ecosystem. Ecosystem is evolving. Unless the bank becomes a serious partner in the ecosystem, you are lost. So that's how the technology is relevant to a customer in the future.
Yes.
Thanks.
So finally, we understand that you are going to take over the leadership of Sri Lanka's largest and strongest private commercial bank in 2022. While we are indeed proud and congratulate you as an old royalist, what is your view on leadership and any advice for young royalists as well as for youth in Sri Lanka?
Yeah. So this question, when I saw also, this is a question you can write a book on, right? Leadership is such a vast area. Historically, leadership is one of the key human traits, right? If you see 5,000 years back in Rome or 2,500 years back in Japan, China, or India, the leadership had been a key trait in human beings. So as a corporate leader, I would say first thing, when you go up in the ladder, now you might start with as a accountant, you might start as a, let's say, computer engineer. When you go up in the ladder as an accountant, you have to be 90% technical, 10% maybe leadership. When you go up in the ladder, you are required to you manage a team. You are a leader of a team. People will look up to you. So when you go up in the ladder, your skills should become more human oriented. You have to manage the team, the people, rather than your technical skills. So in that way, you need to build your soft skills, your negotiation skills, understanding of the people, be a team player, right? So these things should be improved over a period of time. So you to be a leader. Otherwise, you will be even as a CEO, you can't be a accountant. As a CEO, you can't be still programming and becoming a IT engineer. So that's one thing. Your skill set should evolve. That's one thing. Other thing is you have to inspire the team, create a trust. As a leader, you have to create trust among subordinates. That you have to ensure that you are there for them in need of any help. You have to show that as a leader I am there, and let them play in their space, right? Let them groom, nurture to get the next level. You have to facilitate that. If you try to control everything and try to have rules to hamper their innovation, hamper their communication, or putting out the ideas, you are not going to get the best out of the team, and also you are not going to groom them. So you have to facilitate them to take certain level of risk, open communication, and also when they do a mistake, that should not be an opportunity to punish them, but to teach them why you have done a mistake, why it's wrong, and how to improve the next time. Then you are creating a set of followers, like a real leader. Then as an institution, it will get benefits because there will be succession. So to do that, you have to create trust in the team, and also you have to delegate certain level of your authority for them to come up in the ladder. Then only one day you can leave out a legacy that you have built a culture of resilience in institution, and there's succession in the institution, and that your team is now managing or leading the institution. So from people like Sir Richard Branson to many people, Ratan Tata in India, they have created a legacy by not trying to control people, but trying to nurture and facilitate them. So as a leader, you have to show that to the team. And also there's a famous saying, normally we say learn to listen, right? Now as a leader is the other way around, not learn to listen, listen to learn. That means in a meeting or when you talk to your subordinates as a leader, listen to them and learn what they are trying to communicate. Then you will understand, you will get many benefits. One thing, you will understand and correct the subordinate or your team member if they are wrong. Secondly, you will get enriched with ideas because the people are talking and you are listening to learn something. Then the collective decision making will be at a higher quality than the decision made by you individually. So that will add on to the organization ultimately. A collective decision at a higher level of quality will always benefit the organization. So that's why you have to be a leader, not learning to listen, but listen to learn from your team. Then you can drive the team to the correct direction. There are many traits. I am not going to tell everything. You have to be impartial. Sometimes our leaders, where they go wrong in decision is, they try to favor somebody, or they are, with regard to race or with regard to gender, they try to discriminate people. Yeah. It's not going to help in a corporate, right? You have to be impartial. You have to recognize the people who are contributing, no matter your personal relationship or your ethnicity or their gender or their age. No, you have to recognize the people who are genuinely contributing to the organization and elevate them. Then the organization, other people also will get the message. The people who are contributing the organization will have a chance of going up, not the people who are just coming behind the bosses and trying to please them. Yeah. It's the organization. If my famous saying is, I tell always my subordinates, if you look after the bank will look after you. That means you have to look after the organization, then the organization will look after you. So if you create that culture, people will trust the leader and the organization rather than going and trying to please individuals and getting their benefits, which is very short term. So, and final thing, where the leaders can go wrong is they don't understand their own blind spots. Stemming from what I mentioned earlier, listen to learn, right? That also is part of avoiding your blind spots. As human beings, we can have many negatives. As a leader, before executing something, if you don't see what is going to go wrong, the entire team, entire organizations can collapse. Because of that, always think that you also can make mistakes as a leader. That's why you have to get ideas from the team. In a bank especially, you have to plan, look at the risk proactively, and manage the institution, because ultimately the banks are managing depositors' money. Yeah. So because of that, there's another thing in management now, it's a new thing called, now normally we say after death you call it post-mortem. Sometimes you have to do a pre-mortem as a leader. Pre-mortem is before something happening, post-mortem is after something happening. You plan for a project, plan for something. Pre-mortem is you sit with your team. As a leader, you tell everybody to tell what can go wrong. So then they will speak. Maybe there could be certain loopholes or potential pitfalls that can be managed and eliminated by as a leader if you communicate with your team. So there are many things, but I think leadership, you have to read these books by written by management gurus, the leaders, then you can even in YouTube there are so many leadership kind of discussions, TED Talks, podcast. So youngsters can always, rather than spending time on games and you can spend time, but even part of your time can be dedicated to these to enhance your skills and your thinking towards leadership. Thank you.
Yes, sir, definitely. Thank you so much, sir, for joining us today. Your presence and wise words help to magnify our cause in the best possible way, making this project a huge success. We look forward to our next interaction soon. Wishing you all the best of luck for your future endeavors.